Right now, I'm going to show you two reversal patterns that you can use to learn and use them easily, which is rally base drop and drop base rally. If you use this in conjunction with the playbook and use it for your first red day, first green day, 3 days long, 3 days short kind of plays, these will be very beneficial to you. Right, so what are reversal patterns? Hopefully by now you understand what reversal pattern is. So when the market comes to a price where it's deemed rather too expensive or too cheap, and that point, the market, it's then people step into the market and then pump the direction they want it to go from the price where it is too cheap or too expensive. Now, I've wrote out here what it means, so I'll read that out for you as well, like I do on every video, so that you understand what it says on the charts, because some people are not very good at reading, and that's why I read these out, so everyone can learn. They make it easy for everyone to understand this, the concepts that I put behind it, and then I explain and abbreviate on things to help everyone understand them. It seems to be working, so we'll keep going the way we're going. So, reversal patterns in trading, specifically rally based drop, which is RBD, and drop based rally, which is DBR, are crucial for identifying potential trade reversals. These patterns indicate a shift in the market sentiment and can signal the end of an existing trend and the beginning of a new one in the opposite direction. Understanding these patterns can help traders to anticipate major changes in the market direction. Okay, so rules of rally based drop. The structure. Rally. The pattern starts with an upward price movement, as you can clearly see on the chart. Base. It then stalls and it starts to go into a little range. I know that it's not covered at all, but I don't usually do that. I just usually take the area box, and when it moves from the box, I'm looking for a trade off a fair value gap down to the market. So, but this is where it starts to move sideways. Okay, it's not going up anymore, it's going side. Then you have the drop. The pattern concludes with a downward movement, which indicates a reversal of the previous uptrend. Implications. Bearish signal. RBD suggests that after a period of indecision, that the bears will then take control, pushing the price back to where it came from. Entry points. Traders may look to do some short selling opportunities at the end of the base. Okay, so once you see it coming out of the base, you're then looking for a pullback into a fair value gap or a supply area that you can then tap into and then take a trade from, with your risk being at the end of the supply or whatever you get into the market. Volume analysis. Higher volume during this drop phase compared to the rally phase can significantly change the direction of the market. It will also indicate to you the pattern strength. Okay, so let me just explain this to you so you can see it. We have the extension after a manipulation. It moves upwards and then has three layers. So level 1, level 2, and level 3, as the playbook shows you. It then moves back level 1, level 2, and level 3. It moves then into a range. I'm looking at this point here with my trading into this fair value gap to take the trade down to this low. That would be exactly how I would trade it. And then I would get out, because that would be show you at level 3, if you do look at the playbook, that the market will then make a pullback. We do not know how big the pullback will be because it's in an upward motion. This could break up to the upside and take the high, and you could then get stopped out in your lot short because you've not taken profit and got out there with a sound risk to reward. Now, when I told you this is the only place you should be looking for the trade, you shouldn't be looking to enter on this side of the market, because if you look, it goes into a V shape, yeah? So you want to be getting into a short position on the second side of the V. You want to be getting into the trade from the second side of the V and then coming out. So it's always on the second side. You should be acting from the V. So that was rally base drop. This is drop base rally. This is the complete opposite. That one was for a short move. This is for a bullish move. The first move for the drop-based rally is, as you can tell, drop. It begins with a downward price movement. This was taken just before that price I showed you before. We had a base, which was down here. When we came out of the base, we then extended to the upside and had a rally. The pattern then shows you completed upward movement, indicating a reversal from the indication from the bearish downtrend. Implications. The DBR indicates buying pressure that has overcome selling pressure, leading to a potential uptrend. Entry points. You need to be getting into the market once you start seeing break of structure, which is roughly around about here. Getting in at the top of the box here, stop loss in the middle or just underneath that low, or you could put stop loss underneath the box and try go to the upside, taking out the high up here if you're going to be conservative. Volume analysis. Again, you need volume. You need to know that the volume in the candles, and you can see that the candles are printing really large candles compared to all these stagnant shit candles that it's been printing for the last 2 days. Okay? This is it for you to see on a larger scale. We had the drop, then we had the base. This base never broke below this low again, did it? So I'm now taking what's going on in the market at this point. We could see a reversal, a dump, and a pump. Same concept. This is where you all start realizing that all these things are all tied in, that they're all connected, and this is probably going to finish off a lot of traders when they get to this course. And then when they get the playbook, it's probably going to open your eyes to a different world of trading. So you had the form, then you had your consolidation, sideways movement. Did it break above? Did it break below? Once it came out of this sand here. I've not took this part in here because you don't want to be making the box too big, because that way then your stop loss will be really freaking big. I'm then looking for a movement to take out this high, and when it does with a big candle, I'm looking for a fair value gap to tap into, or a demand area, which would have been in probably this area here. You will then get a touch from this demand area. If you really wanted to be like quick into it, you take this area here, it comes down, taps into the demand area for you. When it comes in, you then move forward and ride it up 3 layers of rise. So identifying the patterns, you need to look for clear phases. You need to be understanding that it's a definite upward or downward movement. You need to make sure it's well defined, or the drop or the rally, okay? Support and resistance in these movements for the RBD and the DBR, it can obviously act as support or resistance levels where you want to be getting into the market, okay? You need to be looking for this to be forming your areas of supply and demand. And then contextual market analysis. Assess these patterns within a broader market trend with all the other indicators and for giving you extra confirmation. That's the reason why I create these indicators for you, so that you guys have the extra confirmation that you need and you don't need anything else. There's 7,000 million plugins on TradingView. You don't need to be using them all. You just need to be using one or two. So rally-based drop and drop-based rally are patterns that are instrumental for traders that are seeking to identify potential reversals in market trends. These patterns, when confirmed with additional technical analysis and volume considerations, can offer valuable insights into entering or exiting trades. However, like I say with all the other videos, with all trading strategies, it's crucial to apply sound risk management and consider the market's overall context when interpreting these reversal patterns. Now you know 2 ways for you to look for and identify as a supply and demand trader for the best ways to trade for reversals. Next video is going to be continuation 1. So see you on the next video.